So you got to love when the markets are absolutely easy to trade. And today is one of those days, guys. We got the jobless claims number, guys, that's been flatlining. And now guess what? It's jumping up, and the jobless claims number is up stupidly high. I mean, the last time we had such a spike in the job claims was around COVID. Now, the only problem is with COVID, businesses were forced to shut down. There's nobody forcing businesses to shut down, but yet too many people are showing up at the unemployment line trying to collect their unemployment benefits. And to be specific, the number came at 263,000. Just to put it in perspective, for the last few years, pretty much, that number stayed at 217,000, roughly, give or take a couple of thousand. So this is a big move from what we normally see that's been a very stable environment for jobless claims number every Thursday. So if you were to draw it on the chart, you basically had a flat line for the last few years, and now you got a super big jump in terms of percentages. And I would say if you were to look at it from the charts perspective, if we're to put the unemployment claims on a chart, this would be the beginning of the big move. And so the beginning of the big move higher in the unemployment claims, meaning a lot more people are going to be showing up to the unemployment office next week and the week after. And basically, this is the beginning of a big trend reversal to the upside in the unemployment claims. And so very easy to line this up with a situation where, hey, they can no longer hide the fucking numbers. That's what I've been talking to you about, guys, for the last few years. I said, look, there's going to be a moment in the market where they're no longer going to be able to hide the real numbers. So now the cat is out of the bag, okay? And what happens next is 2008. And there are various causes to go through the 2008, because back then it was a mortgage crisis, financial crisis, and so on. So a lot of banks, they were in a much weaker position than they are right now. So that would be the first counter argument to the fact that, hey, no, it's not a 2008. But if you look at conditions, I would say this is way worse than a 2008, because we're completely the regular economy is completely shutting down, and it's not for COVID reasons anymore. It's because businesses are laying people off. You take smaller size companies are going out of business. The record bankruptcies is something that you're going to be hearing in the news. The state of housing is absolute mess. And what I'm saying is we're just in the front of dominoes falling in a big fucking way, okay? And in order to understand how bad things can get and to really focus on the easiest trades, the reason I say today is easy because, look, it should be undisputable, undeniable that the job market is falling off the cliff. So it started with a couple of job numbers last month, this month, the big job revision number, and now the jobless claims. So anything that has to do with the job market is completely fallen off. And I'm here to tell you this is just the beginning of it. So normally, when people are losing their jobs, just to keep it in simple terms, well, they no longer need to go to the gas station to put gas in their car to go to work, okay? So naturally, you would associate lower job numbers and people losing jobs with a weaker demand for oil. Weaker demand for oil is just a part of the equation because you got to match it with the supply. Well, supply is going through the roof, okay? OPEC was believed to possibly put a pause on the supply, but instead OPEC increased the supply. And the reason in their recent meeting just 3 days ago, they increased the supply. Oil held up, actually went up slightly higher because the amount of increase for the month of October was only like 137,000 barrels per day. But what most of the people are not focusing on is during that OPEC meeting, it's by actually taking action, a step forward to increase the supply again, puts them on schedule to unleash a potential another 1.6 million barrels per day at the time where the demand for oil is dropping off the cliff. And if you were to look at the 2008 charts, guess what dropped the most? Sure, the market's crashed 50%. That's a given. But if you were to put on a trade, okay, despite of the size of your account, the trade that's going to pay out exponentially, kind of like S&PS trade from, the prior 2 days, is oil. Oil in 2008 drops from $150 per barrel to $30 per barrel. Now, you may say, well, what's the big deal? Well, the big deal is not the fact that, it drops like 80%, but it's all the most important part is within which time frame. So it does it in like 5 months. So oil is trading around $63 at the time I'm recording this. Okay, we just got this data that points to a strong uptrend that's just beginning in the jobless claims. And the market completely brushing it off, right? We're getting a 10-point drop on indexes like S&P and then bounce 10 points. So nothing, just regular shit. But I want you to ignore this immediate reaction, which is almost looks like a non-reaction, because this is way deeper than what the market is pricing right now. And all the market is focusing on is, again, what? The rate cut. They're not focusing on the root of the rate cut. They're just focusing on the cut itself. Well, the cut itself, okay, many will argue is going to produce the market to go higher, is very bullish. But in context of a 2008 setup, okay, when the Federal Reserve is cutting rates for the bad reasons, such as the job market falling off the cliff, when you examine those type of situations in history, they always lead to a market collapse, not a bull market. And so oil could be one of the easiest fucking trades anybody can take on right now, utilizing put options. And if you don't know how to put on this trade, guys, you got to get in touch with the coach today. You got to set up your account to trade oil options. Guys, this is the easiest trade. This is an inflection point where the demand is dropping and supply keeps increasing, and we're at the point of them lines crossing. So will oil hit 56 tomorrow? Will oil hit 56 over the weekend? I think oil can hit 48 by fucking next Friday, and it's at 63. Such a move in oil will make you guys millions if you understand how to put on this trade. You can literally make, on such a move, oil going from 63 to 48 by next Friday, you could literally make, with 20K, you can fucking make $1.5 million. Okay, that's the kind of trade we're talking about here. Potentially, it could be even more. I mean, it all depends on when you enter the trade and, what you end up paying for your cost of your options. But guys, there's never been a time where all of a sudden, you wake up, everything lines up, and they're like, oh my God, oil is still at 63. Oh my God, everybody's fucking asleep. Nobody's seen the 2008 playbook. Nobody's dumping oil yet. Well, they are going to fucking dump it today, and they're going to dump it tomorrow, and they're going to dump it next week, okay? All these geopolitics have been played out again and again and again to where oil doesn't even move on these geopolitical news anymore like it used to. And I think the main focus in the oil market is going to be the situation where you've got demand dropping off and the supply is increasing at the very same moment, which is going to cause oil prices to collapse. It is absolutely undeniable and is absolutely inevitable, just like the job market finally them showing us the real data of the job market falling off the cliff. Okay, so it's a 2008 playbook, guys. There's nothing like Recession is not a reason to be bullish on the market, okay? And yet somehow 99.9% of market participants, they're so brainwashed with this idea of a rate cut, okay? I'm here to tell you that what's probably Federal Reserve going to do is now going to cut the rates by 0.5 point next week, okay? And that's going to make the market collapse. It's not going to make the market go higher. Because if Fed cuts 0.5 point this time around, market is going to be like, oh shit. How bad really shit is going to be the question when Fed is going to be cutting 0.5 point next Wednesday. And trust me, you don't want to be waiting to put on your position next Wednesday, all right? Because chances are people are going to wake up in the next 2 days, in the next 3-4 trading sessions before the Wednesday trading session, and they're going to be dumping. People will, ultimately today, the market is like not doing anything, but don't be shocked that you're going to walk in and look at your computer screen later today in a trading session and all indexes are going to be red. They're going to wake up tomorrow, you're going to have a major gap down because people will be unloading ahead of this rate cut. Don't make this market convince you that nothing is happening, that this market is just going to keep brushing off the recession again and again and again because Wall Street is just so convinced that somehow AI can save the universe. The AI can save the financial markets. AI, well, the banks, their main argument, okay, short-term rates are coming down, long-term rates are going up, okay? Well, that's not the only component to look at, okay? Just think about it. Let's focus on the rate cuts for a second. Are rate cuts really going to save the financial markets? Absolutely fucking not, okay? Guess what? Somebody that went and filed for unemployment benefits today because they lost their job a month ago and they couldn't find a job, okay? Are they going to be applying for a mortgage? No, because they're out of a fucking job. Are they going to be applying for some other loans? No, ain't nobody going to give them a loan if they don't have a job. So how much difference does it make to those people that just lost a job, whether interest rates up, down, fucking sideways? It don't fucking matter because they don't even have a job. So to say that, well, the financials is one of the best sector to invest your money in right now, it's total garbage, okay? Because you got to look at the entire picture. And when the economy is collapsing, generally it is not a good fucking idea to buy financials. Yet, all the Wall Street people that you see in public giving speeches, all of them will tell you, no, recession is such a great fucking thing. It is so bullish. We're going to print money. We're going to It's garbage. Guys, it's garbage. Recession is not good for United States financial markets. It is not fucking good. So you don't listen to all them idiots and lose your focus just because market keeps brushing off all these negative news. Because there's going to be a moment, a day where possibly there's going to be no news. And you're going to walk in and be like, holy shit, the market is down 15% today? Like, how the fuck did I miss that? Well, there was nothing happening. There was no headlines. There was nothing because the market is going to make you believe like it's going to be able to ignore all these bad headlines that are hidden now almost on a daily basis, and it's going to seem like there's nothing that can bring this market down, and you're going to start trading thinking that there's nothing that can bring that market down, and you're going to miss one of the biggest fucking trading opportunities of your lifetime because all of a sudden, no news, no nothing, and the market is going to collapse. Okay, so I don't want you guys to miss that because it's coming. So don't look at the market complacency right now. Just understand the market is so near the breaking point. It is absolutely unbelievable. So use the 2008 playbook because, this is the current market environment, it's 90%, okay, 2008 playbook. The only missing ingredient is the banking system is a little bit stronger right now. But how long is the banking system going to hold up? Because at the rate those job losses are going to be coming in over the next few months, okay, before you know, the delinquencies on mortgages are going to go to the moon. The delinquencies on credit cards are going to go to the moon. The delinquencies on auto loans are going to go to the moon. And under such conditions, okay, all of a sudden, the financial stocks are no longer going to look as strong as they may still look to some market participants today. So I would say short the fuck out of financials, okay? Short the fuck out of oil. Short the fuck out of all these sectors of the market, okay, that dropped big in 2008. And to keep it simple, guys, the biggest thing that dropped in 2008 within the shortest amount of time in 2008 was oil on the same market conditions that we're looking at today. Oil dropped from $150 to $30 per barrel in 2008 within just a few months, okay? And I'm telling you, history is about to repeat itself again because, look, the historic analog is perfect. The demand versus supply conditions are perfect to produce a shocking move in oil prices to the downside, guys. Now, you get in touch with the 13 Market Moves Coach today. Don't miss this wild trading opportunities. Don't be going fucking shorting oil next week when the shit is already at $56, okay? You got to get in now.